Hello everyone, welcome to Financial Engineer. Today in this video, let us learn about what is share market and how does it works, difference between shares and stocks, what is BSE and NSE, who are regulators, importance of brokers, types of markets in India, and what is equity. What is share market? As everybody knows, it is a place where multiple company stocks are traded, right? First, let us understand the difference between shares and stocks. Share means if you bought any particular company's shares, then in any conversation you are supposed to tell I have this company's shares, but you cannot tell I have this company's stocks, because stocks means if you have multiple company shares in your portfolio, then in any conversation you can tell I have these company's stocks, but you cannot tell I have these company's shares. Okay, know this difference. There are many exchanges in India where shares get traded, right? But safe and best is BSE and NSE. What is BSE and NSE? BSE is Bombay Stock Exchange, which is the oldest stock exchange in Asia, and there are over 5,000 listed companies in BSE where you can invest and trade. And you might have came across word Sensex, right? So what is it? It comes under BSE, which is its index. In newspapers, TV channels, you might have heard Sensex is up, Sensex is down, right? So what is it? In Bombay Stock Exchange's 5,000 companies, top 30 companies will come in Sensex, which is its index, okay? All these top 30 companies' price and valuation will be combined and will be given its value. Like today, Sensex is 58,300 points. If all those 30 companies' price drops down, Sensex will also go down. And if their price goes up, Sensex will also goes up. It's just a reflection of the 30 companies. Now in NSE, which is also called as National Stock Exchange, exactly like BSE, NSE is also a stock exchange where shares get traded. Over 1,600 companies are listed in National Stock Exchange, and its top 50 companies' price and valuation are compiled and given its value as Nifty Index. Today Nifty is trading around 17,300. There is one big daddy of all stock exchanges who regulates all shares transactions in India, which is called as SEBI, the Security and Exchange Boards of India. SEBI is very powerful. Any rules related to stock market is taken by SEBI. Its job is to regulate activities in stock market, to develop stock exchanges, and to protect retail traders, because right, stock market is full of manipulation. So if anyone gets caught by SEBI who tries to manipulate the market, they will be banned and severely arrested. Who are these brokers in market? See, without broker you cannot do anything in stock market. If you want to buy any company's share, then you have to open a demat account in some particular broker and you have to place order in his site. Then he places that order in stock exchanges and then the share comes to you in your demat account. So first you have to have one good broker. Till now, we learned what is share market, NSE, BSE, we discussed about SEBI regulators, we discussed about brokers. Right, now discuss about types of market in India. India has equity market, which regular companies' shares are traded, right? Another is commodities market, where commodities are traded like crude oil, natural gas, gold, silver, copper and many more. And another is currency market. Obviously currencies are traded in that. Let's discuss deeply about equity market today. Commodities and currency is a very big topic. We will discuss about this in next video, okay? What is equity investing? Equity means any company's ownership. If you are buying any company's shares, it means you are buying that company's small equity. Means you are the owner of small portion of that company. Let's discuss with an example. Imagine 5 partners opened a company with investment of 2 crore each. Now their company value is 10 crore, right? Now in legal registration, they divided their company into 1 crore shares. One share value is 10 rupees and they split 20 lakh shares for each of them. Now 100% of ownership of that company is with 5 founders, which total value is 10 crore, right? After some time, to grow their company, they require higher funds, right? Imagine they require 5 crore for their expansion. So what they do is, they do public issue. All 5 founders keep 50% of their equity to public by IPO, which is called as initial public offering, for 50 lakh shares. They sell that 50 lakh shares at 10 rupees, which is called as face value. Now, they sold that 50 lakh shares and raised 5 crore funds from public, right? What it means is, if you have bought 1 lakh shares of that company, you are 1% equity owner of that company. You will get profits of that company as dividends every year. Like this, stock market is called as equity market, stock investing is called as equity investing, stock trading is called as equity trading. If any investor buys any share in any company, he gets equity ownership of that company. Now, What can you do in equity market? Think any company share. You can directly buy shares of that company and become equity owner. For safe investing, you can invest in mutual funds. You can buy bonds of that company. You can do derivatives trading through futures and options. Futures and options are a bit advanced level. I will explain all about this in next upcoming videos. For now, I think you understood the basics of Indian stock market. In next video, I will cover about commodities market and currency market. Thank you. Have a nice day.